Okay.
Mm.
Participate first, Jake.
No thanks.
All right. So we got everything. Good. Morning, everyone. We're going to be running. For those who don't know me, my name's Dan Alexa. So I come in here from time to time, drop off some stuff. Matt, I'm not going to lose you already, am I? I'll stay awake. We're just going to go ahead and review the EFS Flex plan today, kind of review the plan basics. Has anyone in here participated in the past? One? Just one? No one else? Is anyone thinking about enrolling in it? Maybe. Okay. All right, well, that's a good start. So Jay's going to definitely sign up, so I know that. So we'll go ahead and get started. I mean, your flex plan, as you can see here, it's going to be where you're offered the benefit, for some tax-free benefits by having money deducted out of your paycheck and then using that to pay for unreimbursed medical expenses. I see, if eligible, the one date here. I missed that. I got the open enrollment dates in there, but basically the plan year will start January 1. You're immediately eligible once you're hired, so everyone here could participate if they wish to do so. And basically, we'll go through the different categories, but you select which category you want to participate in, if anything. The open enrollment dates are going to be from November 30th through December 24th, Christmas Eve. And I'm not sure if Tony or Leslie will send out an email announcing that open enrollment period. Leslie will be doing that. So basically, you'll be able to select through the different categories that we're going to go through. What you're going to be able to do is, pay for qualified expenses incurred by you, your spouse, and your dependents. I mean, the definition of dependent, basically it goes to your children who will not turn age 27 in the tax year and receive that tax-free. Definition of spouse has changed too recently with the recent Supreme Court ruling now. So now it's going to be any, legally married couple, opposite or same-sex couples. So those are going to be your eligible dependents that you can submit reimbursements for with your medical flex plan. Now, I'm not going to go through every number on this table, but I mean, with your flex plan, whatever you decide to elect, it is going to come out on a before-tax basis. So if you know you're going to have some expenses coming up, whether you need some new contacts, whether you need new glasses, whether you're going to have, some routine visits, whatever the case may be, if you know you have some of these expenses coming up, why not do it on a before-tax basis? What this table just shows you here is we're just going to take two employees, Tom and Sally. They both have, flex plans offered to them where they can do it for either daycare, medical, or outside health insurance. So we'll get into those details about it. But the main thing is we're just going to contrast the two. We'll just say Tom takes advantage of all these programs, Sally doesn't. And you can see by Tom using these flex plans, his money comes out that he's going to be paying for with these expenses on a before-tax basis. It lowers his taxable income, it lowers his spendable income, and if you compare that to where Sally, she says, it's too complicated. It doesn't really work for me, there's paperwork involved, I don't want to do it, it's just not for me. She decides, I'm going to pay as I go. Just give me my paycheck, I'll pay for the expenses. So she's going to be getting taxed more on all of her, paychecks because she didn't take advantage of the flex program. And when it's all said and done, in this basic example here, you can see that Sally has, about $2,500 less in take-home pay because she's paying for her expenses on an after-tax basis. Tom, taking advantage of this program, does it on a before-tax basis, so it gives him more flexibility. So, as I say, in my family, we've got 3 out of 4 that wear contacts and glasses, so we know we have eye exams that we can always flex. We have some of those routine expenses. If you know you're going to have, even a few $100, why not fill out the form and take advantage of the tax break? So these programs do add up for you. Now we'll talk the different categories that you have in the plan. There's going to be a full-use medical FSA where you can pay for out-of-pocket health expenses not paid for by your health insurance. You cannot participate in this full-use medical flex spending account if you take the high-deductible health plan. So we'll get into those details later on in the presentation. But if you're not doing the high-deductible health plan, you can do a full-use medical flex spending account. There's a limited use flex spending account. So if you are using the high deductible health plan, you can use the limited use flex. That's for vision and dental expenses only. So you have two different options there, and we'll kind of go through those examples. You have the health savings account as well within the plan if you are using the high deductible health plan as well. So the HSA comes along with it. If you're not doing the high deductible health plan, the HSA will not apply for you. And then you have dependent care where you can do it for daycare expenses, etc., for those of you with kids. And then there's also an outside health insurance provision as well that we'll talk about for individually owned policies, kind of one-off policies separate from the benefits offered through EFS. Now we like to bring this one up from time to time because this was something that came up a couple of years ago. If you're going to be participating in the full use medical flex spending account, I said earlier, if you're the full use medical flex spending account, you have to be eligible to participate in your employer sponsored plan either here or through another family's member's health plan as well, or through your spouse, so to speak. So that's the one thing that if you're wanting to do the full use medical flex, you have to be eligible for the medical benefits here or through your spouses. Make sense? Okay. So for the full use medical flex spending account, it's pre-tax dollars coming out of your paycheck where you're going to be able to use it for unreimbursed medical expenses. Something that's not covered by insurance, and these are just some of the examples. Just remember, if you're doing the medical plan through here, your premiums that are coming out are already on a pre-tax basis. This is separate from that. This is from what's not covered with your medical insurance, what you can get reimbursed for. And we're, medical and dental plan deductibles, eye exams, contact lenses, hearing aids, batteries, prescription drugs and medicines, orthodontia, even medical mileage. So there are a lot of, things that you can get reimbursed for that if you're deciding, whether or not you want to participate in Flex, once you start kind of going through things, it can add up for you over the long term. So just something to think about. You can get, over-the-counter drugs, reimbursed. In the past, it used to be a little bit more flexible, but now, if your doctor said, you need to take aspirin, so to reduce the risk of a heart attack. So, your doctor's recommending that. In the past, you could just get a letter of medical necessity and get reimbursed for it, but the IRS now is frowning on that. You need to get a prescription number attached to it. So if you're getting any over-the-counter drugs, like I said, Allegra, aspirin, whatever the case is, doctors are familiar with this requirement and can get you a prescription number. I've talked to some people too. I haven't had to do it myself, but they work with their pharmacy too, and they've been able to get a prescription number attached to it. So if you're thinking about doing over-the-counter items, just remember, you'll need to get a prescription number for over-the-counter items. The one other piece, letter of medical necessity doesn't work for those, but it'll still work for herbal supplements and vitamins. So if you're on some type of alternative medicine prescription with a doctor, you can get reimbursed for those, get a letter from the doctor as well. The only thing that doesn't qualify for, as you can see on the slide here, is multivitamins, because you have to get a letter for each of the ingredients within the multivitamin. So yes, the IRS wrote it that way. So you have that flexibility, for those medical expenses. Now online, there is a resource for you to use at ebcsolutions.com. There's a tab where you can click on an eligible expense table, and that will be changing soon, right, Jacob? We'll still have the same check, but it might be a little different format in the months to come. And basically, it'll take you to the FSA store. This is a new relationship that we have with EBC and the FSA store. Basically, it's a website with all Flex eligible products. So everything out there on their website is something that you can, use to get, spend your Flex dollars on. So it's not maybe the cheapest if you were going to Walmart or anything, but it is a convenience factor where you can go out to the FSA store, buy things with your Flex dollars. So it's one of those tools out there, but if you're just going out there for a list of eligible items, when you click on the link, it takes you over to the FSA store, and then you can look up, if you're not sure, hey, is this, one item eligible for reimbursement or not, they've got a very extensive list, and that's updated on a monthly basis. So it is a resource out there for you to use, and if you decide to do some shopping on there as well, you've got the flexibility. They accept all major credit cards. You can even get a Benny card through the Flex plan, which we'll talk about in a little bit. and basically you can do your shopping out there, store your card information. It's usually a 1 to 2 day turnaround. We have coupons that Stevie has codes for if anybody wants. And generally it's free shipping on anything over $50. So it's a nice convenience factor. Like I said, it's not the cheapest, but you're paying on a pre-tax basis already, and you can do the shopping from your home and have it shipped for free. So something to take a look at, but if you want to just use the list out there, you can go there. You don't have to register or do anything like that. Now, with the limited use medical flex spending account, as you can see here, use this category if you're funding an HSA. If you're doing the health savings account along with the high deductible health plan, you want to do some flexing. You can't do the full use medical flex, but you have the option to use this limited use flex. And basically, you'll be reimbursed for vision and dental out-of-pocket expenses. So you've got that option available for you too. So if you're looking at the high deductible health plan and HSA, and you still want to flex some dollars, maybe you go into, see you need some new glasses, some contacts for the year, you can do this category as well. Now with the HSA that we talked about, we'll kind of hammer it down because a lot of people are like, oh, I want the HSA, but you have to take the high deductible health plan to get that HSA. The contribution limits for 2016, single didn't change, that's still $3,350. Your contributions for a family policy, you could do $6,750. You do have the opportunity to change it on a monthly basis. The amounts will carry forward. There's no use it or lose it. We'll talk about that with Flex, but with your dollars in your HSA, that's not a use it or lose it type provision. And this is self-monitored, so you're keeping track of this HSA account on your own. It's not something that the HSA doesn't go through EBC. So it's a totally separate relationship. You sign up for it and you keep track of your expenses and everything else. So it is an option for you to have as well. There's also an outside health insurance category where you can kind of have these one-off policies and get reimbursed for those premiums as well. Some of the ones that would apply: cancer policy premiums, accidental death and dismemberment policies, just ones that are specific illness type policies. A vision or dental policy, if you have it outside of EBC, you could be reimbursed for that. But that's going to vary with individuals. Long-term care is no longer eligible. We used to have it where you could flex Medicare, some long-term care provisions, and then we'll also talk about some Medicare as well. But long-term care is not an eligible expense to have that as a one-off policy. The government doesn't allow that. A couple of major changes. I got ahead of myself a little bit, but your health insurance premium costs. If you had an individually owned policy in the past, before the Affordable Care Act, you used to be able to flex those premiums. That was shut down effective January 1st, 2014. So just as a reminder, if you're doing it through EFS, it's automatically on a before tax basis already. But some people had their own policies separate from their employer and they did it through Flex. You can't do that anymore. That's not allowed. Medicare too, you used to be able to flex that as well. We were not able to get clear guidance from the IRS over the last couple of years, so we used to allow certain parts to be reimbursed, but now, effective September 1st, 2015, you won't be able to do it. So next plan year, you can't get reimbursed anymore for any Medicare. So if that changes, if we get some clear guidance from the IRS that allows you to do so, we'll let you know. But at this point in time, you can't do that. And then another thing too is you can't use your flex dollars to get reimbursed or purchase insurance on the exchanges. That's kind of against the whole Affordable Care Act as well, but just we want to remind these little bullet points to you about that. Dependent care flex, you've got that available too. So if you got young ones out there, basically you can be reimbursed for those who are eligible while you're gainfully employed or while you're looking for employment for these types of expenses. It can be for any dependent under the age of 13 or for the care of a dependent who's physically or mentally incapable of caring for themselves. Some of the more popular reimbursement items that you can get refunded for: home day cares, child daycare centers, preschools, nursery schools, day camps. There is a hold your spot fee that applies more to the teachers that we work with. Sometimes if you're going to be out for a while, your kids are going to be out of daycare, you have to pay a fee to keep your spot in that daycare center, because I know it's competitive these days. that would be reimbursed eligible. A couple of examples that are not eligible will be overnight camp and kindergarten tuition. Those are not eligible expenses for the dependent care. Your elections, if you decide to participate and sign up, take advantage of this benefit. Your elections are irrevocable unless you have a qualifying change event. Some of those examples would be, marriage or divorce, birth, adoption, death of a dependent, termination of employment, or separation from service. We'll put it softly there. Basically, it has to be a change in your employment status that would impact your eligibility, possibly. So maybe someone was full-time, they go to part-time, they're no longer eligible for benefits. That would be a qualifying event. Also, two other items. If you have a change in your cost or coverage, for instance, daycare rates go up in the middle of the year. Surprise, we've got higher rates. If that's the case, that's a qualifying change event. The outside health insurance policies, usually when you hit the 20s, 30s, 40s, 50s, those premium costs seem to go up for these outside policies. You're getting older, so it's going to cost you more. In those cases too, you get a premium change, that would be a qualifying event as well. If you have any type of change event coming, you're thinking about it possibly, contact everyone over at EBC. They can answer any questions for you, if it gets a little bit more detailed than just some of these standard examples. But they're there to help you out. Now your limits, dependent care is still the same. Maximum is $5,000 if single or married filing jointly, or $2,500 for each married couple filing separately. Your medical flex is still $2,550 as well. It went up a whole $50, and that's per participant, not household. Filing claims, it's pretty straightforward. You'll need to get your receipts. And we always say, send in copies of your receipts, keep those originals for your own records. My wife and I, we do Flex every year. We send in what we need to do, to get reimbursed. We keep all of our originals. When you get, a copy of your tax return, we kind of put those receipts in there and file it away, keep them for 7 years. But you can also, basically, when you're filing these claims, you can do it any number of ways. I don't know if inter-office mail qualifies or not, but usually you do it either U.S. mail, you upload it to the website for it to be processed, or people still fax it in. I would just say the faxing in, I think, requires a little bit more follow-up from those processing the claims, just due to fax quality of receipts. Receipts, I can barely read them nowadays myself when I get them. So when they fax, they're a little bit tougher. Email's not allowed, just due to HIPAA laws, so you can't email one of the claims over there. It has to be uploaded to the EBC website. All claims will go to EBC, and then keep your original receipts. Just hold on to those, send in copies, just so you have that for your own record. A couple of provisions within the plan. You do have a grace period and a run-out period. The grace period will basically be 2.5 months after your plan year ends, and basically it'll allow you to incur and submit expenses from the previous plan year. So you get to December 31st, you still have $50 in there. You still have 2.5 months after the end of the plan year to incur expenses to get that money out. And just for those who are participating in the plan currently, if you had money that carried over into the following year and you elected for new dollars that year, they will automatically use up the older dollars first. So they'll get rid of that plan year first and then start with the new plan year. As well, you have a run-out period, so basically, myself, I would submit my receipts as soon as possible. I want my money back, but you also have the option that you have up to 6 months to submit your expenses to get reimbursed. So most people don't go that long, but I encourage you, as soon as you got the expense, you got your receipts, get that paperwork in, get it done, get your money back. That's the best way to go. There is a Benny card that is available for you as well. It is $20 a year. It's paid for by you. You'll get 2 cards, as the slide indicates, and that'll be loaded with your Flex spending account election at the beginning of the plan year. So it is a convenience factor. It doesn't automatically remove the paperwork for you. So just keep that in mind. You can use your Benny card at your store. So if you go to Walmart, Target, wherever you decide to do some shopping, you pick up a few grocery items, maybe you pick up a prescription. You go to checkout, they're going to scan everything. Basically, you'll swipe your Benny card first, that payment will come out, and then the remainder you'll have to pay through your regular credit card, cash, check, however you handle it. So it is a nice feature, but it still will require paperwork from time to time, so you will be contacted. The main thing is for standard amounts, co-pays, payments at hospitals where it's a fixed, co-pay amount. Our system's programmed to cover those types of expenses, so it knows, $25, $30 for different medical plans. It'll automatically know those types of co-pays. But when you have kind of a different amount, like a prescription or picking maybe something up over the counter or something else, that's where there may be a request from EBC to get additional documentation. So we do it on your behalf. So if you use your Benny card, just hold on to your receipts, and if somebody comes back to you, you've got it saved in your Flex folder, fax it over to show them, what the expense was for. So it is a convenience, but you don't have to take advantage of it. It's kind of up to you. So just keep that in mind. Reimbursements, we do process claims daily and pay them out Mondays, Wednesdays, and Fridays. If you set up your banking information, it'll be put automatically into your account in about 3 to 5 business days total process. If you're doing the mail, either mailing in your claim or also bonding a check mailed back, add a few business days in between there as well, so it takes a little longer. I encourage you to just have the money wired. I think that's the easiest and the best way. You submit it, it goes automatically into your account. The medical flex category, that can be reimbursed up to your full amount at the beginning of the plan year. So say you budgeted out that you're going to have a set number of expenses throughout the year. Come February, you fall, hurt yourself, break an arm, you incur some extra medical expenses, you do have full access to that medical flex amount. Dependent care and outside health insurance, those are a different type of reimbursement schedule. Those are going to be reimbursed only as the money comes out of your paycheck. You can request for that to be reimbursed. So for those of you who have done daycare in the past, the money comes out of your paycheck, you get your receipt from daycare, submit that, you get reimbursed. So it's just kind of a routine process after a little while. You've also, one important thing with your flex categories, it is a use it or lose it provision. So we went through the run out period and everything, but the main thing is when it's all said and done, if you don't use up these dollars, they will default away from you. So you don't get to keep them. You've got plenty of time to do it. So we have a couple of points here. Just conservatively estimate your expenses. You want to make sure you're going to be able to use up all those dollars before the end of the plan year. You do make separate elections for each category. So if you're doing medical flex, if you're doing dependent care, if you're doing outside health insurance, those are tracked in different categories. You can't move the money around. So if you elect for something for medical and you need something to cover for dependent care, you can't transfer it. Each category stays fixed. And then as you get closer to the end of the year, you'll get a reminder from EBC 90 days before the end of the plan year, just letting you know, you're getting close to the end of the plan year. Make sure you use up those dollars. And that was all I had. So, any questions with regards to the medical flex, the limited use flex, the HSA, the outside health insurance?
I have a question.
Yep.
So you talked about the changes that you can make throughout the year or throughout the qualifying. So like for daycare, so obviously you might have daycare expenses that go up, but what happens if they go down? And you've already elected that amount.
I don't know. I've never had that happen before.
And so then by the end of the year, you have some left.
Yeah, if it went down, I would assume that if it's up or down, it's going to be an allowable event that you could reduce the amount to. Most of the times daycare goes up, but if it goes down too, that's a qualifying event because the amount is changing.
So then, okay, so that's a good question. So like at the end of the year, if you had some over because it went down, does that grace period, it doesn't carry over for that little bit of time?
No.
Not at all.
But you would, if you know that the rates are going to be going down, you could budget that out and change your election before a time, and then you get it used up at the end of the year.
So that is okay to change.
Yeah, it's a change event. I'd probably be the first that daycare went down in this state, but
well, as they get
they're
older,
babies are more expensive than toddlers.
Oh yeah, I know. I had to go through it, flex them as long as I could. They're out of that now. Any other questions?
What's the difference between the FSA and taking a tax credit? Can you explain that one?
I'm not a tax expert, so I don't do that portion of it. So I just do, the flex information for that.
I have a question.
So.
So, say I know that when you get terminated or you get downgraded in hours, you get the exception thing.
For a change in status?
Yes, the change in status exception.
Okay.
But what happens like if I change jobs entirely, but I don't change hours? It's
If you change jobs,
like if I go
one
from
employer to another employer?
Yep.
Okay, so if you leave,
Yeah.
basically you're going to be able to get reimbursed, up until your date of separation.
Okay.
So then your flex ends here, and then whatever you do elsewhere, that's something else. For the
Okay.
medical side, for your dependent care, or if you're doing outside health insurance or anything like that, then for those pieces, you would be able to get reimbursed. Whatever comes out of your final check. Once that comes in, then you could get reimbursed for that portion even after your separation, technically. But your medical flex will end once you end employment here, and then whatever you do, elsewhere, if they have a flex plan, you can do it there.
Right. Okay.
Okay, who gets the leftover money in the FSA account? Does the IRS get it? And if so, do they credit me back for the amount on my income tax?
It goes back to the employer, and that's it.
So you said you can use it for dependent costs or for my spouse. They would need to be on insurance through here though then, correct?
For, dependent care?
No,
For the medical?
yes.
Okay. You can get them, they don't have to be on your medical here. They can
They
just
don't.
be, if they're an eligible dependent, if they have an unreimbursed medical expense,
I
they have
can
their
use
own
it.
policy, you can use it.
Okay.
It's as long as you can show the documentation for a medical expense. So, and they're your legal spouse or
Right.
child.
But if they're on our medical plan through us, that's already pre-taxed.
The premium coming out of your paycheck, yes, is pre-tax.
I was
So
just
it-
talking medical expenses in general.
Yeah.
Oh, expenses. Okay, sorry.
No, it's okay.
Expenses.
So did you get your question answered?
Well, this was answered through the
Oh.
slides.
Oh.
How about, do you get accrued interest on the unused money?
Accrued interest on the unused money.
Yeah.
No. It's your dollar election and that's it. There's no earnings on the flex dollars that you elect. You may be thinking the HSA account. I mean, the HSA, that's not through EDC,
No.
but generally they have a savings kind
No.
of CD or
That's a
something. I can't.
flex question.
Okay. Yeah, there's no earnings, just straight dollar amount.
Is there a minimum you have to put in?
Nope. I mean, not that I've heard of. Jay, have you ever,
No minimum.
what's the lowest you've seen that somebody signed up for? I'm just curious.
I don't know, there's pretty, sometimes low, outside help things just because of premiums, I guess.
Yeah, I guess that might be only a few bucks, so.
I don't know, like $100, I guess I've seen
Okay.
for the year.
No minimums. But I mean, these programs do work. So I mean, if you know you've got some of these expenses coming, whether it's through dental appointments, medical checkups, glasses, contacts. I mean, you could use these dollars up, and take advantage of the tax break. So I always look at it, if you can do it, just don't go crazy. Because I've talked to many people doing flex meetings. Sometimes somebody has a surgery scheduled for the end of the year, and all of a sudden something gets pushed back, and all of a sudden they're sitting there with a pot of money. So be sure to that you're going to be able to spend those and use that money up wisely.
What kind of tax savings do you get? Is it federal or state or part of one or the other?
Federal.
So it's a federal?
Yep. Well, I think you set it up with ADP, the elections.
I set the earnings deductions from the payroll.
Is it with ADP, by the way?
Yeah.
Okay. Did we ever use Wells Fargo here? Okay, I was just curious. I just saw that on one of our adoption agreements, and was showing Wells Fargo for payroll, and I was like, no, my paycheck says ADP.
It's probably a dumb question, but we went over, all the different plans and the regulations for each and what have you, but how exactly does it work? I mean, with an HSA, it takes out your paycheck, it pools in the account. Where here, you're setting, you're electing an amount.
Mm-hmm.
So what happens if you get like a big bill at the beginning of the year and you haven't necessarily contributed that much yet from your paychecks? It covers it, or?
It'll cover it. So if you elected, $1,000 for 2016,
Okay.
and you didn't plan on using it up right away, January, boom, you're hit with some major bills.
Yeah.
You can use all that up, and your deduction will still come out
Just
throughout
keep-
the whole year.
Okay.
I'm not sure what, different employers have different, provisions that if you leave and you've done a full use, you used up more than that's come out of your paycheck.
Okay.
You have to sort that out within
Okay.
that policy, but I don't
Yeah.
do the flex here, so I'm not sure. What has that happened?
I don't, it's an EBC question, not an EFS question.
Okay, that's fine.
I don't know that.
Yeah, I mean, it happens from time to time, but, usually most people, it doesn't, that scenario does not run through. So.
Thank you.
Is there a limit, like does the system only allow a percentage of coverage, or could you blow the whole entire fund on one visit, like an eye visit?
For the flex, yeah, I mean, remember that amount is available right away. So if you have unreimbursed expenses, uncovered costs, you could use it up, so.
And then that's used up right away, and then you can't collect for more unless there's a change in event.
Correct.
Like you were saying, okay.
I mean, if you have some type of qualifying change, you might be able to look at, that deduction's still gonna be set up, it's coming out
Yeah.
through the whole year.
Yeah,
So.
that amount's
And what are the different categories?
You can do the full use medical flex spending account. So that's if you're doing kind of a regular medical policy. There's the limited use, if you're gonna do the high deductible health plan. There's a limited use flex coupled with an HSA. So if you're not doing the high deductible health plan, you can do the full use medical flex.
But
And it-
for the, like daycare, medical,
Well, that I was gonna say, then after those, there's also the daycare, and then you also have the outside health insurance. So if you had kind of a separate cancer policy
then,
from your employer, you could also get reimbursed for those premiums.
Are you wondering what the breakdown of three, like if you want
Right,
to do
so,
one of each, and then how
right.
you elect your?
right, yes.
I don't know what you're asking, I'm just
No, I can just go
helping
back
you
to
ask
that.
it.
That is what I'm asking.
Yeah. I mean, I just had that one
No, I
slide.
think that, that first slide where you had the couples
Yep.
broke down, that's what she was wondering about. Right? Or she was looking at these, or no?
I mean, was that what you were wanting to see? There's the full use flex, limited use flex, the HSA, dependent care, and then the
all
outside
those
health
different
insurance.
things. Okay, so those are all the different categories.
Yes.
And now you have to pick then dollar amounts. for
Depending
each
on what you're
category.
wanting to, what would apply for you.
Class.
So you have to couple the flex plan in with what's going to be, I don't know if there's going to be future meetings with the medical, offerings as well. So you'll have to keep that in mind too, that meeting, and go, okay, you go through those meetings and go, okay, I'm going to do the high deductible health plan. Okay, well, if you do the high deductible health plan, that knocks me out of the full use medical flex spending account, but I can do the limited use flex if I have vision and dental expenses coming, as well as I'll participate in the HSA. It's a matter of kind of putting all the benefit pieces together. So, as things get closer to the enrollment window, because you still have a month away, you've got my name, I can give you a card, call me, email me, we can go through it again once you get, more pieces of the puzzle together.
Could I get a copy of this presentation
Yeah.
for some of the employees that are not here? We have a lot of people missing. If my spouse has an FSA with a different employer, can we both max out the dependent care? Is there a limit per family?
Dependent care for daycare? You were saying?
Yeah, dependent care?
Yeah.
Isn't that daycare?
Yep. No, I had that on there for you with the amounts, because remember, with dependent care, the maximum is 5,000, depending on how you're filing. If you're single or married, filing jointly, or 2,500 for each. It's a maximum for the household for 5,000. Med FSA, that's 2,550 per participant.
So there's a limit per family?
Yep. Absolutely. Anything else? Bueller? All right. Well, enjoy your Halloween and Western days today. Thanks.
Thanks, Dan. Thank you.
And then, you know, call me or email me anytime if you have questions. And Jay too. He's a representative from EBC. No, I'm just kidding. No, call me anytime if you have questions on things.
So if I change my election with them to reduce the daycare, how does that work on your end to reduce the amount of the paycheck?
You would change it through EBC